Hey everyone, Couch Investor here with another video for you today. In today's video we're going to go over my number one stock for the month of June, which was Starbucks. If you haven't watched the video for my top stocks to buy in the month of June, they're going to pop up right here, and Starbucks was my number one pick. In this video I'm going to go over some key points why I think Starbucks is a good pickup, especially now with maybe the outbreak starting to calm down. Even though some people might talk about a second wave, Starbucks has been reopening stores most of the cities that I know of, but they've changed their business model a bit. We're going to talk about that as well. And before I get started, if you haven't subscribed to the channel, maybe now is the time to hit that subscribe button and maybe hit that notification bell as well, so you get notified whenever I upload my videos. And if you like the content, maybe leave it an early thumbs up as well, as it really helps me out grow the channel and get my videos out there to you guys. So without further ado, let's dive into this. So Starbucks stock started the year on a high, opened the year at around about $90, then it saw a very low point at $56, and now we're just in the middle at $75. Obviously the stock is still down around 20% year to date, but in my opinion the stock has not been, let's say, receptive as most stocks during this recovery in the last 2 months. From 55 to 75, I've seen stocks go from $7 to $40. People are underappreciative of what Starbucks stocks is offering. It's paying a dividend of 41 cents per share, which is more than most stocks this year are paying, but that's not the main point why I think Starbucks is an interesting buy. I will have a couple of key points in this video. We're going to start with obviously their growth potential, and more specifically in China and with their partnerships with Beyond Meat. So as for China's growth, we saw in the first quarter of 2020 an increase of 15% in revenue and a 16% net increase in stores over the last 12 months. That is just in China. Also important to know that China is just 10% of the global consumption of coffee, but it's been growing year over year. So if they can tap in that market more aggressively over the next coming years, well, we would expect revenue to be growing every year for around about, I think, the same percentage as we see now, or even in the 20% year over year growth. And as well with the Luckin Coffee scandal, I think Starbucks can especially benefit from that. If you don't know, Luckin Coffee was the Starbucks of China. I've made a video about that, I think, a couple of months ago, one of my first videos. Obviously, I've lost my investment in that because the stock plunged, I think, 90% or so after the release of the statements released that they, well, had fraudulent numbers for around about $300 million. Their CEO and their COO or CFO were fired. Basically, Luckin is a Starbucks type of chain, but they're more into tech environment, meaning you can order your coffee and pick it up when you want. Let's say you want your Frappuccino, you order it at 9, at 9:15 you're at the store, you get it and you go away. Obviously that's something Starbucks is trying to do and starting to do right now, but that's only because of the outbreak. That's also one of the ways how Starbucks is attracting new customers right now, not only in China but as well in the States. You can get your first coffee for free if you sign up to the rewards program. The only thing you have to do is download the app, obviously claim the coupon, and then go buy your coffee. That's just an incentive to get people back to their normal routine of going maybe in the morning or for lunch to Starbucks, get their coffee, maybe grab something to eat as well, and then get business going as usual. Obviously it's not going to be as usual because, well, I don't think you can still drink your coffee at Starbucks. As of now, it's just a pickup service, but they're also partners with Uber Eats. I think there's no delivery fees if you order for a certain amount, which is great. Again, good incentive for people to order from Starbucks, and another way for Starbucks to get their business back and running. But obviously there has been a bit of backlash as well regarding the BLM movement. There were some reports saying that some employees were not allowed to wear certain t-shirts regarding that movement. They answered that by saying that in their policy it's not specifically against BLM, it's just all political aspects as a whole, but they've changed that. They said that if employees want to support BLM publicly, they can do that as well. Obviously, it's public pressure, especially now, so really they didn't really have a choice but to allow their employees to wear these types of t-shirt. Obviously, the stock got hit because of that, but it's been sorted right now. But I think it's something most of us want to know and wanted to know before we invest in a type of company. Now moving forward, moving on to next topic, I'm going to talk again about their partnerships with Beyond Meat. So as you might know, Beyond Meat is this fake type of meat burgers. It's a plant-based burger. Obviously they have a variety of things that they are producing, but now they're moving with this type of Beyond Meat menu to China to push their sustainability agenda into Asia. It's a positive thing for Starbucks, but it's as well a very positive thing for Beyond Meat, as China is a huge market, especially in the meat consumption. So if they can replace that with plant-based meat, that would be another huge chunk of revenue going into the company. If you want me to do a video about Beyond Meat again, because I've made a video about that, let me know down in the comments below. And my last key point for growth for the company is competition is not crazy. The main competitors, let's say, is Dunkin. Most of us know what Dunkin Donuts are. Well, Donuts Coffee, America runs on Dunkin. Dunkin Donuts is big, I won't lie, but it's not as big as Starbucks. It's not recognized worldwide. Meaning in Europe, I think Dunkin is starting to have some presence there, but again, they might know it, but just because they went to the United States and got their donuts there in the morning. Now again, both companies are good to have in your portfolio, but in my eyes, the competition is not that crazy. I think Starbucks is way above Dunkin at the moment. And then the other one is, like I said, Luckin Coffee, but with this whole scandal going on, I don't see Luckin really recovering from that. And if they do, they will always have that in their back of their heads. Well, we are the company that had $300 million of fraudulent numbers in our books. So again, I think Starbucks doesn't have that much competition regarding, well, breakfast, coffee, lunch in these types of environment. Dunkin remains to be seen what their plan is moving forward. They're also moving forward with Beyond Meat and maybe Impossible Foods as well to bring more healthy stuff on their menu, but still nowhere near Starbucks as a whole. Now we're going to look at the stock charts real quick, and then we're going to end this video. Alright, so before I get started with the charts, I found one last article I wanted to show you guys, which is very important for what I said just before. So basically, Starbucks is going to close 400 stores, going all in on off premises. So this is how a top-notch Starbucks store looks like. They're going to close 400 of those stores. Might not look like this, but you get the picture. Now, obviously, this article will be in the description below. Now, why is this important? Well, first of all, Starbucks closes more than 100 stores per year each year, especially in the Americas. Now, why is this important? Like I said, Starbucks is going to move to a more on-the-go coffee model, which is cheaper for them to manage and probably has the same amount of revenue or even more because it's faster, less personnel, etc. This is going to happen over the next 18 months. So basically what I said before, they are moving into a Luckin Coffee type of ecosystem. Obviously that's just 400 stores. They don't say how many stores of those 400 will be converted into those on-the-go coffee stores. Right, so let's jump into the graph real quick. So most of the lines were already there last time I've made a chart for Starbucks, which was, I think, beginning of June when my top 5 stocks for June's came out. I think we were around somewhere around here or so, June 4th or June 2nd. So basically what happened, stock went all the way up, perfectly on the downtrend and uptrend line, but then cracked and went down. There's a gap right here. I don't know if you can see it. but there's a gap right here, which means probably on the way up it will get filled very, very quick. There's a gap on the downside, but got filled 2 days later right here. Now, my major resist support line, well respected as of now, as you can see, bounced here and then bounced back on the June 11th. Now I drew this line today, which is the new uptrend line because the previous one was broken, so we can actually delete that so you can see it more clearly. So as you can see, as of now, it's just here. If it breaks the downtrend line, obviously we hope it will bounce back on the long-term support, but as of now I think the stock might go a bit sideways or so and work its way up. Previously, like we said, we were right around $78, which would be a almost 28% gain to its all-time highs, or even, yes, to its all-time highs, close to $100. Now let's move that towards the price we're in today, and that will give you an almost 35% gains. That's why, again, I put the attention on Starbucks, because I think it is very undervalued, and for the longer term I think it's a winner. I wouldn't be surprised if, let's say, next year, even if it's only next year, seeing a $100 price on this stock would make it a 35% gains plus dividend payments, which is, I think, great for you to have in your portfolio. Especially a stock like Starbucks is not a high-tech stock, so won't be as volatile as the others. Alright, so to conclude, as we just saw, I think there is still growth ahead for Starbucks in Europe, but especially in Asia and China. The stock pays a good dividend of 41 cents, and the competition is not that crazy. The stock has been hit very hard this year and has been very underrated in my opinion, most likely very underappreciated by the market. It's one of those stocks that by logic should have gone up much more because they are actually opening back businesses. Instead, the stock has not really moved that much, but then again, that's an opportunity for us investors to add such good stocks into our portfolio. That will be all for this video. If you liked it, consider leaving it a thumbs up, and if you haven't subscribed yet, maybe now is the time to hit that subscribe button. It really helps me out grow the channel and get my videos out there to more investors. Now, as always, guys, take care, stay safe. See you all in the next video, because that's going to be about some gaming stocks. So if you're interested in that, make sure to hit that notification bell so you get notified when I release my videos. Take care, everyone. See you all in the next video. Bye bye.